head snack in the room. Beautiful to see. Beautiful to see the love from everyone. Guys, today we're going to be talking about expect the unexpected. And of course, we have in the thumbnail a chart of Bitcoin in what it looks like on a linear scale. Looks like Jesse Livermore's accumulation channel and coming to an end. And really, the expect the unexpected has a lot more to do with the current situation, the current macro, the current, let's say, the current tension between monetary policy and fiscal policy, the current tension between the Feds balancing their mandate between stable prices, inflation obviously still elevated. They're beginning now or on the verge of beginning an easing cycle. Our expectations going further, inflation is going to be higher, especially if they're able to generate growth from here. And then, of course, what happens when the Fed begins cutting? We got so much to talk about today, and amongst them is going to be this chart, and we're going to look at this chart, and we want to know potentially where we are wrong. Alexa, it's not only from 10 to 11, right? It's taking out the bottom of 11 that is really scary. And we all know that horizontal is confirmation, but it's late, and we all know what those trend lines look like. However, this chart is on linear, and we're going to look at the accuracy between linear and log. So this is directly related to expect the unexpected. My expectations are that obviously Bitcoin cycle peak is going to be a lot closer to the 2028 halving than the 2024. But we still have 2026 to get through, and a lot could happen in between. Now, I expect we're going to see significantly reduced downside volatility. Nevertheless, even if there was a 60% bear market, that's significantly reduced downside volatility, but that's a big drawdown. A lot of people right now, and this is when we talk about expect the unexpected, a lot of people really are pretty confident that we're about to experience some type of melt up. Maybe max pain would be if there was no melt up and then the cycle just topped over here. And actually, this is a great chart to illustrate what that could be. And this is looking at Bitcoin, but Bitcoin is obviously illustrative of overall risk. This would be something that I think would catch a lot of people offsides, and it can't be everyone, but most people generally believe that we are on the verge of some type of melt up that is either going to end September, October, the 4-year cycle. That's what 4-year cycle theory points to, or even into early 2026. Liquidity is about to go out. I remind you, in 2000 and 2008, the great financial crisis and the dot-com boom bust, liquidity was rising and going up. And those are two. So liquidity offers one, let's say, piece of the puzzle, but it's not everything. A lot of people think that then we're entering into what is going to be a bear market or recession. Now we are seeing a weakening of the jobs market, and that is conducive to we're seeing further deterioration of the hard data. The Fed is all over it. Today when we saw that we were looking at sorry, I got all over. Today when we saw the JOLTS jobs numbers, the market's initial reaction were very favorable. The markets began rising and rising off of that data because the markets were then pricing in a pretty significant chance of a September cut. You can see after the data we went down and all but confirming. Now, listen, I just want to put this date onto your calendar and then talk about that price action because it's very important. We are looking at September the 9th, next Tuesday, a week from today. the BIS revisions of the job data, the BLS, excuse me, the BLS's revision of all of the jobs data, that is likely going to be the catalyst that either confirms that there's going to be a cut in September or that it's off the table. The market's initial reaction today, when after the jolt stabber and pricing in that cut, was for risk to respond very favorably up until you saw we had Fed Bostic, and he said that the risk to the two mandates between inflation and between the job market have become more balanced. In other words, the job market's deteriorating. We need to focus more on that now. And then he's saying that September meeting is in play for a cut. But then he went on to say, and the market didn't like this. So far, it doesn't like this. He said that he sees one rate cut as appropriate for 2025. And that's what the markets didn't like when he said not that the cut is on the table for September, that he thinks that only one cut is appropriate. And that's when the markets lost their bid. The bid was coming off of, don't forget, the bid wasn't anything well, it's not positive. The bid it was off of weak data. And the market said this means the Fed's cutting in September. I like it. And is that a hint? Is that a potential hint to how the market will react once the cuts come in? And I don't know that, and you don't know that. And my expectations are, if we just look at the data, it doesn't matter if it's cutting into normalization. It doesn't matter if it's cutting into a panic or a recession. That first month, prices, let's say choppy. Yeah, it's red in each occurrence, and there's no big signal in that, right? The signal comes after that first month into the second and third month, because if you're cutting into normalization, it should be received as bullish. But if you're cutting into recession, man, buckle up. The first 3 months are the most difficult. So yes, around that cut, not again, we got to give it the first month, a little bit of wiggle room, a little bit of uncertainty, let people take their positions, figure out how they perceive this is happening. Oh, guys, heads up. Could you guys let me know if you see any flickering today? I We were able to get the fiber. The upload speed is dramatically better by like a 10x. And I'm hoping that this goes ahead and this solves that problem. That would make things a lot easier. So that's what I'm hoping. Um, so we continue looking over here at our, this is the NASDAQ, right? Obviously, well explained the price action today, the ramifications coming into Tuesday, September 9th, when we get the revisions. And if those revisions assure a cut, well, then I expect that we might see some relief, right? Markets should respond favorably up until the meeting. And then we have on the 17th meeting, if they do cut, then I just expect a lot of uncertainty at a time where the obviously the seasonalities are also weak. So you could see historically coming in from around the 10th through the end of the month, or through the later stage of the month, it's weak, and it's a presidential election year, which means that through the end of October they are weak as well. So could you envision a world where the next Tuesday the revisions come in poor, and they might not either? Could you imagine they come in favorable and the Fed's like, see that we're not cutting in September, and maybe not through the end of the year? And guys, if that's the case, the thing is the markets probably do what they've done every other time that's happened over the past year, and that is continue their ascent up. Um, So, could you imagine a world though where those revisions come in poor and it goes ahead and it secures the probability of the cut in September on the 17th? Markets then, favorable off of that news that the cut's coming until the cut comes, and then that uncertainty for the next month, right? What we normally see, whether they're cutting into favorable conditions, recession, and or panic at a time when we have poor seasonalities. This is my expectation, which means for our positioning, which is the most important, right? Right now, CTM has just gone 100% into cash. Now, yes, he did, and I'm glad you brought that up. The reason I didn't highlight what he's running for, Waller's running for the job. Right? He's looking to become nominated for the Fed chair. So of course he's looking for cuts, right? Yeah, like, come on, Donald. I'm as dovish as they can be. Pick me, yeah. And so he doesn't hold his that's I'm glad you highlighted it. It's important for the nuance of the conversation, Vincent. But market was paying attention to Bostic's comments, who said, I guess this is making a dovish action if there were to be a cut in September, hawkish in the sense that if you're posturing, you only see one cut as appropriate for this year. Um, it's been a minute since we called out the pew 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 pew. Tomorrow's session is going to be highly focused on the bond markets, the long end of the curve, the coming global yield control curve, and what that means for risk. Listen, a lot. We're trying to talk about a lot of things all at once, as always. Let's get into our positioning first. We've gone 100% into cash. This is absolutely amazing, fantastic to be at this time when we're just looking at weak seasonalities over the next 2 months. However, my expectation now, you might not like it, because if you remember what happened July 15th, I was like, okay, had the markets come too far too quick, watch what happens now as we move into August. And yes, we could be trading up higher that first week of August around the 14th, 15th. That's exactly where we peaked. But what I'm saying now is, listen, we could get chopped up a bit here. I expect my own mental state is any positions that we take now and through the end of October have a good chance of no follow through in them. I'm trying to prepare myself for a little bit of chop and a little bit of drawdown. Now, of course, if the markets, you know, go one way or the other, that's great for us. We're either out of the market on the sidelines, or, if we're going up, we're carrying and we're building up P&L. But if we go chop, I'm expecting to get chopped over here. So we're across the board on the stock market, which is right centered on tech, and then two Bitcoin plays between MicroStrategy. Man, what an exit on MicroStrategy. Do you think that everyone out there wishes they might have the moat, the mother of all templates for MicroStrategy? Look at this, is called, this is a break even, a small gain. It's called protecting yourself and being on the right side of the market. Absolutely beautiful. Bitcoin bull runs is currently out of the market, and we're waiting to see if we get some flip flop, right? But we do have not only the CTM filter, we also have the JV filter keeping us out right now. Find out if that, is rightfully so, or, we're getting back in higher than when we exited. That's what we're looking for. We're the innovation, I'm going to call it, continues on V4, and further updates on Solana, Bitcoin. It's the release is imminent, but we're still making sure that we have the best fitted. Now, there's a difference between curve fitting and fitted well. We want to make sure that we have the best fitted models upon release, rather than going ahead and releasing them and then leaving opportunity that we could have done better. So those are out of the market as well, though, which is for Bitcoin, for everything. They're also just neutral right now. So that's why I bring it to your attention. So that's our positioning. And then let's get into a little bit of what's going on with Bitcoin. And the reason Jared, let's just read a comment. He's talking about people grabbing a beer. Not sure what's up, but what's going on. Um, when I talk about Bitcoin, expect the unexpected. I want to make sure that we are laser focused in as so much as that. If you remember what happened last cycle, my expectations, right? We had come to the summer of 2021, people were scared. I was like, no, we're gonna make new all-time highs by October, which we did, but I thought this was wave one into wave two, and we were about to go euphoric. A lot of people think we're about to go euphoric now as well. That didn't happen, right? And what did happen though is just we had the first de-risk at 53,000 occur. And I want to make sure that if we get any type of de-risk event, that we're there to make sure that we are able, that everyone has the opportunity to act accordingly as they wish. That type of information is absolutely priceless. I don't want to confuse anyone when I say that the cycle high I expect is going to be closer to 2028 having in 2024. I firmly believe that to be the case. I firmly believe my projection of what's to unfold, but we have to worry where you're wrong. That's the unexpected. And the unexpected, it seems to be not the unexpected for many. Many believe that right now we are about to hit a melt up across risk, and then we're about to crash and burn into a recession 2026. Don't worry, you'll be able to buy the low, and then it's just going to be up to the glory. I don't think that's going to happen at all, but I want to be aware of what all opposing views definitely say. That's the most important for me, right? I know what my view is. I am firm in my view. I want to make sure that rather than living in a bubble and looking for people that affirm my, there's only two people I know right now that affirm my bubble. Three now. There are three now. Like it was Lynn Alden, Darius Dale, and now Ray Dalio. And I feel bad about putting Ray Dalio in there because man, did he get China wrong? If there's anyone like buy China throughout all of 2021, buy China, was he looking for exit liquidity? I wonder, and I don't know because I have to assume that he knows what's going on, and there's no way he could have messed up that bad. So I don't trust, like use different vantage points to form your own analysis. But a lot of people think that, along the lines of melt up, recession, and then we're looking for some type of deflationary event. Look, I believe all that's stagflation. I believe all of that is coming. Only I believe that it's probably coming a few years from now. And of course, you know me, I'm like, oh, guys, for a long time in 2024, I was like, we can't look beyond 3 months. That's not realistic. And then it became, okay, now we're trying to look a year ahead and setting our sights on the midterm elections is going to be pivotal for markets. There's a lot more things happening in between. And amongst them right now would be when the Fed makes that move towards cutting. That's a pivotal point in markets, right? I want to watch and see what happens when they do it and what the market's reaction is. Now, I'm under the impression that monetary policy is playing less of a role than it has in our lifetimes. Nevertheless, by the way, Ray pointing towards he believes that we're in a political and monetary regime that we were closer to in the 1940s. The 1940s is the last time that we were seeing fiscal dominance. The 1940s is when they did yield control curve. The 1940s was a lot different than what we've seen obviously in our lifetimes, and a lot of people are hyper focused on that type of recency bias. Now, let me continue these thoughts that we're having over here and trying to put together. So, um, my expectation, and again, look, we got a lot to maneuver as the Fed cuts. Obviously, you all know, I believe in the Fed cycle. I believe the next thing that happens is that when the Fed begins cutting, they're going to have to wind down QT. Now they cut 50 basis points and still do QT, so that's different. But I expect that they're going to go ahead and wind down QT, and then the balance sheet is going to begin growing and going the other way. They're going to be going ahead, and when that happens, I think that's conducive for risk. On top of, yes, monetary policy playing less of a degree, but when they go ahead and they cut rates, that's likely going to be conducive for liquidity, and it's likely going to continue to help. Now, does that change? That there's a greater risk right now that inflation is a greater problem than a recession. It doesn't seem that we are like headed towards a recession outside of the macro changing rapidly and some type of event needing to be recalculated in our view. Inflation being a problem, I don't think is a problem until inflation is much higher. I think if they're able to go ahead and extend the cycle out, if the US government is able to go ahead foster further growth, at that point in time, inflation is going to have bottomed. It's going to continue to rise. Yes, next year, like if there's any type of further deterioration of the housing market, for example, if they do cut rates, and when they cut rates, you see long-term yields rise and mortgage rates rise, and that, becomes a catalyst that leads to a further deterioration and or eventual, mean reversion of the housing market. That's not going to be inflationary at first. That is going to be deflationary, but move beyond that, inflation becomes a problem later on, and I can't put a time frame on that. And I'm saying I don't know. Is it 3 years from now? Assuming that they're able to go ahead and engineer this growth. What happens in next year's midterm elections is going to really be pivotal for happens markets after that. So I believe a lot of people's macro view is correct. I just think that they have their timing all wrong. So I'm going to continue to consult it, and that's where I spend a lot of my time is really focusing in on what these ulterior viewpoints are, just because I don't want to be blinded by what I believe is happening out there. I mean, listen. Fast forward over here. I want to talk a little bit about what's going on here with gold and Bitcoin. Um, like so far, obviously, we remain within a sustainable channel. The sustainable channel and the break of it would obviously be like bull market invalidated. The one thing about that though is that happens really late. Like if that were to happen, and this is a rough line, obviously I have it elsewhere, all more accurate, but it is that late even. It's not, is that late if you're about to enter into a bear market? Bitcoin off 30%. That I have tension there. Okay, so just so you know, coming ahead, Bitcoin off 30% in a bull market is obviously routine, even in this current regime that we've been in for the last 2.5 years. But it is a major technical breakdown if it occurs. So I'm going to tell you, if that occurs, that becomes our first de-risk event. And I am not going to, like I put in quotes here, believe it. Like I still think that the bull market here extends out. But that's where I leaned over here as well. And I didn't, that's where I leaned over here. Yes, like take all your profits from the low over here. Yes, pay off your loans, de-risk, but I still thought there was a chance that the market was going to extend out. It wasn't until the second de-risk event, the break of 35,000, that changed my posture drastically. And that would be the same thing over here. I would still be thinking, all right, well, you got to de-risk. What you wanted not to happen has happened. You have to de-risk, except that I don't have the chart up over here today. I'm just looking for it, y'all. Have we seen any flickering? Maybe this is it. That's not it. Have we seen any flickering, by the way, today? Y'all? Nah, that's not what's happening though. You know, a lot of people want to believe that, but that's not what's happening. Um, no flickering. Vincent, we like that. That's good news. Tomorrow I'll bring in back the video then of myself as well. That's good. I think it was the upload speeds then. That's fantastic. Glad to have that out of the way. And we continue doing what we do here. That's working hard to stay on the right side. I like what an amazing, amazing gift that we have in being able to trade momentum and position accordingly. How quick have we been able to get neutral when needed? Uh, and ahead of what is this unfavorable season. We'll have to continue to take it as it comes. Nevertheless, um, I guess this is the most important thing. I'm talking to you all about looking ahead and where that first major de-risk event would come into play. I'm gonna come back to this to talk about the potential of what could be already have seen the accumulation cylinder of Jesse Livermore having already played out, right? And we are into the breakdown, the pull of hope, and then the bear market. Regardless if we think that's happening or not, want to be ready for it. And there you could see that this closely aligns with this schematic, by the way. Let's say, for example, you took out the 90,000 over here and you tested into that area. That would be where we broke down the retest. This is where you would have to say, all right, even though I wasn't expecting it, here's what seems to be happening. Right now, I'm a little bit concerned about the breakdown we saw, and now we're coming in for a retest. Obviously, bull markets and all of our trading is keeping us out so far. But this is an important area. Would like to see price trading above here, above 116,000 in order to have invalidated this current breakdown that's in play. So I'm going to come back and look at that in 1 second. I just wanted to look at the right now gold and Bitcoin, and I think that this is kind of neat, so I want to share it with you. First, I'll start off in the where the bull market broke out in 2013, right? This is the bottom, right? And obviously, if you go to the top where Bitcoin peaked, then Bitcoin and gold are neck and neck with gold outperforming. By the way, this is so different than what's happened before. Whereas anytime Bitcoin has gone through a bear market and then been able to reclaim gold, it's been launch. And this time we see them running neck and neck. And right now, even gold actually leading the way. This is clearly indicative over here of the fiscal dominance taking place. It's clearly indicative of the shift from foreign governments moving from US treasuries into gold. And it is different than what we've experienced up until now. So a lot of people want everything to be the same. 4-year cycle. It's a 4-year global refinancing cycle. A lot of people catch on as soon as patterns break. Look, if it's a 4-year global refinancing cycle, what has changed? Well, governments right now are refinancing and we're just rolling over short-term duration. That's drastically different. Um, Look, but that's not what I wanted to talk about. I was talking about lining them up from the bottom here, and then let's bring into the picture a few things. First, I'll bring in Ethereum, and Ethereum from the bottom outperforming gold, and Bitcoin obviously well outperforming as it normally does during that part of cycle. T triple Q, right? We don't look at the Nasdaq like here we have the Nasdaq. Do we have the Nasdaq? Just the Nasdaq itself anywhere? Here we go. And NASDAQ and gold, you know, doing the same thing. Bring in T triple Q, which is what we like to play as far as our trade. Our worst performer, outperforming the best of the best, including Renaissance Technology, by far our worst performer, T triple Q. Just closing a trade over here, mid 20% into profit. Gotta love it. And you can see the outperformance over there. And then, of course, the darling has been NVIDIA. NVIDIA tremendously outperforming Bitcoin during this particular boom market, because this particular bull market has been the AI bubble. And a lot of people like to point to NVIDIA and Cisco. NVIDIA makes tremendous amount of revenue. By the way, I don't know if I mentioned it yesterday. This quarter, in the past quarter, there has been. Now I'm going to just divert from there. We'll come back to it. So Nvidia's been a tremendous outperformer. Now let's move over and talk about from the top. So this is from the 2021 top. You could see them both neck and neck from this particular point in time. A lot of people are now saying, you know what? I think going forward, you should probably own gold and Bitcoin, and the ride here for gold is a lot smoother. If you look over here and you add, let's add NVIDIA to this mix. Wow. That's from the last high. All right. T triple Q. Interesting. Gold tremendously outperforming tech from the November high. It's T triple Q. That there's a lot of deterioration when you look at obviously those levered ETFs. That's why we trade in and out of them rather than just holding them for the duration. NASDAQ in relation to both Bitcoin and gold, underperforming as would be expected. Look, I'm doing it off of this pivot point, and a lot of people will point to, well, if you look at for the last 5 years, gold and Bitcoin have basically been, performing the same. Yes, from this one vantage point, and from this one vantage point, they are performing the same. If you move towards the low, obviously it's not even close. If you look at this and view it from our, and obviously this might not be the one that I want to have up, but this is the one I have up today with us. I feel like I'm missing a bunch of charts, and on the restart, they might be lost forever. Oh no, I'll have to get back to it. NVIDIA's performance over the last year. We could take a look at it. Right now, I'm just trying to bring to your mind or your attention of what might be a really favorable way to position. It was brought up by Brownie Brown that when you see at any point in time Bitcoin towards a top deviation, that at that particular point in time, the thing to do might be to then work on dollar cost averaging into your trading account. When you see Bitcoin towards the pocket, it might be a good thing to focus on working dollar cost averaging into the into your spot positions. And that's when we talk about Bitcoin being fairly valued. Right now, it's in the sustainable channel. It's not overvalued, but it's not fairly valued. We want to be cumulative. You're holding in this particular area. The same thing with gold. As gold moves towards any of the as Bitcoin moves towards any of the overvalued, that is the time that likely it's a favorable time if you were looking to build and continue to build any type of spot position in gold. Sorry, I was reading some of the comments. Isn't a rate cut good for Bitcoin? I don't, again, I'm not under the impression that, well, that's what a lot of people are looking for. And that's, Robert, you're giving what the exact path that a lot of people believe is going to lead towards this impulse up, towards this melt up. And again, the greatest pain, we've looked at like decoders business cycle, and we've looked at tech devs business cycle, and we know that neither one of them have yet gone into expansion, right? Could you imagine that they don't go into expansion and instead we see a major move down and enter into a recession? That I think is max pain for everyone. If we do not have this melt up and this euphoric rise where people really expect risk to really rise hard, if this cycle ends without that happening, that I think that would be not, it's not unexpected by everyone, but a lot of people, the most unexpected thing that could occur. I think that's something that we have to watch out for. But as far as the rate cuts, well, if they're cutting rates and you see Bitcoin and risk respond favorably, is that indicative of the Fed cutting into normalization and or a recession? So again, we're like just going by data and history as a guide. Historics say that first month there's really no signal in it, but beyond that and into the next 2 months, there's major signal. Is risk rising or is risk going the other way? And if you think about it from this standpoint, and you look at where we are as far as the seasonalities, and you move towards, you know, Fed cuts September 17th, the next month, October, that's kind of a wash. There's no signal in it. But beyond that, that's also when we have the favorable seasonalities. So if we see end of October markets going the wrong way, that's that's a major sign that we are actually risk is going out, that likely they're cutting into a recession, and we're going to be seeing major risk off ahead. That would be an incredible sign if that was happening, because everything suggests by the end of October, which assuming they cut September 17th, that's a month after the first cut. The next 2 months, they matter so much historically on average what is happening. So that's a fantastic vantage point for us to be watching the price action coming out of there. But if what I suspect is occurring, and around that time, risk begins to run and rally, and they're cutting into normalization. It's not only 3 months; the next 9 months out from there should be extremely bullish, and that's where we're going to find out who had a good read on the cycle and not, or not. But so, Robert, it could go either which way. But tomorrow we're going to be talking about something else that's different, and this is the long term duration bond markets. Obviously, everyone, all eyes on Europe right now, watching as their bond markets are taking a turn. A lot of people hoping the U.S. stays under 5%. We'll take a look at that, what the ramifications would be if they go ahead and yield curve control winds up being implemented, and what that means then for risk in the near term. Don't forget, I agree with the way people are seeing the macro. I just think their timing's off. And I think that they're off by, a few years. And of course, give or take a year or two on either side. But I expect what is good. But if they do implement, because they have no choice, yield control curve, Bitcoin is going to rip. Gold is going to continue to rip. And is it likely that that's what gold has been seeing right now this whole time? By the way, Ethereum did make a repair over here, kind of setting it neutral. Needs to get above the pink line and all-time high to invalidate this sell impulse that's in play. Neutral now. And as far as, what a breakdown would be, this is a CTM. That breaks that line. It's likely then coming back down into the pocket. But gold here is likely pricing in the inevitable yield control curve, not just from the Fed, but obviously here, Europe is going to have to be doing the same thing. I think that is what we're seeing. And if that happens, I don't see Bitcoin peaking in 2026, but extending out further. Either which way, we're going to try our best to stay all over it and on the right side. Decoder went into expansion today. Love it. Thank you for the update. I'll bring that up so we can check it out in tomorrow's stream and just take a look at it as he has us going up into expansion. And here we go. Everyone, thanks for being here today. On your way out, make sure you hit the like button. We'll continue back at it tomorrow. 100% into cash. We wait and we watch and we continue to navigate. Tomorrow we'll take a look at NVIDIA. We'll look at the last year's performance and we'll look at where we are going forward. Everyone, God bless you. Have a wonderful day.